When you look at the market as a whole, big money is moving the market. And big money is not looking at a bull flag pattern, in my opinion, and saying, bull flag pattern, hey, Billy, go put $1 billion in Tesla. Talking about it, I am short. The market's going to go lower. It's going to go lower. Oh, man, the next month, position total went from 900 to like 300 in like a month and a half. And the worst part about that after was every trade that I took after that SPY short, took a Tesla short, lost money on it. Took a Zillow trade, lost money on it. So the Tesla trade, I probably lost 150 grand. Then a Zillow trade, I probably lost like 70 grand. And this is just like, I'm on complete tilt. I closed that year out, I think about $2 million. That to me was one of the best trading years that I could be proud of, even though the year after I made more money, just because I took this big punch to the face, not just financially, but also like from a mental point of view. And I think that year built a really good foundation for 2021, where in 2021, I was able to walk away with $7.5 million in trading profits. And that's where I was like, wow, I really feel like I got this thing nailed down. And I think that that loss helped a lot from that. But I think when you pass the early stage of trading, there are certain positions that are so beautiful where you have to throw more risk. That's where you're making money. Like you won't make big money, in my opinion, by keeping your risk consistent on every single trade. And I say, if you take a trade and you feel all over the place, like, oh my God, I'm up, I'm down, and you get these feelings in your stomach, you're trading too big. And at the time, a lot of people around me would say, see, I told you stocks are scam. You know, no one can make money from stocks. Only the rich and elite make money from stocks and trading and so on. And, you know, naturally, when you hear a lot of noise come into you, go into an element of like, okay, well, maybe they're right. At the age of 18, there's certain things I learned about myself really well. And sometimes I think I got very driven by proving people wrong.
If you've ever had doubts about whether it's possible to make millions of dollars from home, this podcast will change your mind. This is Umar Ashraf, a multi-millionaire day trader. Umar started trading stocks more than 10 years ago using options. Earlier in his trading journey, he set on a target to make $100,000 a year in trading. And now, after years of live market exposure as well as reflection, he has now become a highly skilled and efficient trader. Today, a $100,000 month will be considered a bad month for Umar as he progressively sets new targets for his trading performance. Since he discovered success in trading, he has also gained an online reputation for educating developing traders the importance of risk management and trader psychology. Umar's passion for trading has led him to create his own trading journaling software, TradeZella. In addition, he also runs a proprietary trading firm that hires and empowers traders to reach their new potential. I'm very grateful to have the opportunity to speak with this highly mature trader today. So I want to make sure that my fellow humble traders, you watching here, can also learn from Umar's efficient trading approach and his trading strategies. So don't forget to give us a gentle tap on the like button and join us today for a highly insightful trading mastermind with Umar Ashraf. Welcome to the Humble Traders Podcast, Umar.
Thank you for having me, Shay. Nice to finally meet you after so many years, right?
I know. We've been talking about making this happen for the last couple of months, so I'm really excited. We're in New York City to make this happen.
Yeah, thank you again for accommodating the last minute changes. I just got super sick last minute, so thank you for accommodating to that.
Yeah. For a lot of our audience, maybe they may not know you just yet, but they will really soon. Could you kind of tell our audience about what kind of trader you are and what trading style you kind of gravitate towards?
Sure. So I laugh at that question because my trading style and the type of trader I was from day one to now has grown so much, right? Starting off from penny stocks to mid-cap stocks, to swing trading, to day trading, to scalping, to just kind of figuring out a style that fits who I am and what I want to do. So currently I day trade and scalp, right?
Okay.
I'll heavily trade options and futures. More so options this year, or futures I haven't touched as much. But my trading style has navigated into me looking at the S&P 500, looking at Tesla, looking at NQ, and looking at some of the bigger names like NVIDIA, Amazon, Microsoft, and looking at the stocks that are in movement alongside with the market, right? So my trading style kind of shifted into now a few set of stocks and a few set of market events that I want to focus on and what I think may happen or may not happen. And from there, I'm looking to capitalize on a small move with options to get a higher return.
So you did it kind of gravitate more towards options after trading the lower price stocks and the actual underlying equities.
Yeah, so I've traded. I mean, the problem with underlying equities like Amazon and Tesla and all that is you need a lot of capital to make good money with it. So early on, it didn't make sense. Also, you have the PDT rule where it's like, okay, well, you need this large amount of money to actually continuously make money on Tesla, Amazon, these big names.
Yeah.
And the return wasn't really exciting, right? So that's where it was like, hey, what does make more sense? And for me, that was options, primarily because I believe if you can read the price action on, let's say, Tesla, or you can read the price action on Amazon, just carry that over to the options, right? And trade those. Where that's only if you can read the price action for those individual stocks or the market. If you can't read the price action for those, if you can't trade them well individually, do not touch options.
Right.
Like, do not, just avoid it. Like people see, like they'll see me trading options sometimes, like, oh, I want to trade what he trades. And I'm like, this is one of the most riskiest financial instruments out there.
Yeah.
And I don't think a person that has good enough experience, risk management, understanding of the movements of that individual stock should touch options.
Could you also share kind of what your background is and what got you into trading in the first place? Because to my understanding, you've been trading for 10, 11 years.
Yeah, so I mean, I've been involved with the markets for 10, 11 years. I've taken trading serious after like my first 2-3 years of trading.
Okay.
Right, so yes, I've been involved for 10, 11 years, started taking it as like a serious thing where I wanted to commit to for like 7, maybe 8 years. I started when I was 18.
Wow.
I was in high school and I remember at the time I looked on Forbes.com who's made the most amount of money. And I remember the top 3 people were hedge fund managers. At the time, I was like, hedge fund managers? What are hedge fund managers?
Yeah.
And when I looked into them, it had something to do with the stock market. Obviously, what I do is nothing like hedge fund managers, of course, but that's like what sparked my interest. I was like, okay, I want to make money, right? As an 18-year-old boy, you just want to find a way to make money, right? So I was like, okay, stocks is my way of making money. And at the time, I had roughly 20 grand saved up. And
wow, that's impressive at the age of 18. Yeah.
So it was a lot of like selling iPhones on Craigslist, doing a lot of like website flipping, stuff on Fiverr and different websites.
Okay.
And just also having multiple jobs. And as an 18-year-old, I didn't really have much expenses, right?
True. Yeah.
So it's like, okay, well, how do I be, effective with the money? And I'm not gonna go blow it on stupid things. I'm gonna save up my money and try to grow it. So I took that money, put it into the market. I remember my first trade was JCPenney. And it was JCPenney because my mother, she goes to JCPenney a lot, right? And I remember that stock was so down in the past 2 years. I was like, there's no way this stock is going to go lower. So I put my full account into JCPenney.
The entire $20,000.
$20,000. And at the time, this was like 2012, 2013. Okay. Even if you go to the stock chart, you can see JCPenney went down like 50%. So my 20,000 went to like 10, 11, 12,000.
Oh my God.
Right? And then it went back up 100%. So not overnight, but over the few weeks or whatnot. So that 20,000 went to like 10, then to like 22,000. So I walked out of that trade making $2 grand about. And at the time I was like, oh my God, I did such a good trade. Now, obviously as traders, when we look at that, we're like, wow, a 50% drawdown, making $2 grand, like that's a terrible trade. But at the time I was like, wow, this is so easy, right? And then I started recalculating, well, if I bought all of my $20,000 worth of JCPenney at this price, I could have made 40 grand. I could have made this much or whatever the case may be. And that started opening my eyes up where it's like, wow, I can make so much money with this. And then obviously...
You got hooked.
You got hooked. It's like you get that high of like, wow, I can do this. And at the time, I was in high school because I have an early birthday, right? My birthday's in January. So when I was 18, I was still in high school. So as a high school kid, I just made $2 grand doing essentially nothing. I just bought and sold something, right? And then the next few weeks, that 22,000 ends up being 35,000. So now I've made $15,000 in a span of 2 months. As a high school kid, I'm like, wow, I am going to be super rich. This is so easy. Why doesn't everyone do this? And that's where the beginner's luck ran dry.
Did you know you can get up to $6,000 worth of premium trading tools all for free? As part of the new promo from Centerpoint Securities, you can now open a new trading account and access TrendSpider and Dilution Tracker. They're also offering you free commissions for 60 days and 3 months free of Dash Trader Pro trading platform. I've been using Centerpoint Securities for active day trading and short selling for many years now, so I'm very excited to share this amazing promotion with you guys. They are now available in Canada as well, so feel free to check out the promotions down below. Now let's get back to the video.
And that's where the beginner's luck ran dry.
Yeah.
Right. And when I was making that 15,000 or those trades, I had no idea what I was doing. I was just buying things based on instinct, based on I know the brand, I think it's gonna go up, right? And then slowly 35 to 30 to 22 to 18 to eventually 2,000 by that summer. And when I went to 2,000 by that summer, I was like, wow, this didn't work out the way I thought it would work out. And at the time, a lot of people around me would say, see, I told you stocks are scam. You know, no one can make money from stocks. Only the rich and elite make money from stocks and trading and so on. And, you know, naturally, when you hear a lot of noise come into you, you go into an element of like, okay, well, maybe they're right. Right? Especially when you do fail at something and everyone talks badly about it, you go, well, maybe they're right. But at the age of 18, there's certain things I learned about myself really well. And sometimes I think I got very driven by proving people wrong. Right, that trait could be bad in certain elements, but some elements it's also a good trait to have. And in that trait, I was like, okay, well, let me self-reflect. Did I actually know what I was doing? Like, was I honestly giving this 100% effort? And I was like, no, I wasn't. I just opened an account, I put money in, and I took very dumb trades. And I expected to have a positive outcome.
Yeah.
That's not fair. That's not fair to the game of trading, and that's not fair to myself, right? So that's where I was like, you know what? For me to actually quit this thing, I have to give it a real shot of at least 2 to 3 years. And if I give it a real shot of 2-3 years and then I don't succeed, which I don't see why I wouldn't, then I can consider quitting. Right? So it became like this personal thing. And it's also a realistic approach, right? Even today, you see a lot of traders and people, they're like, oh, I've been trading for 3 months. I lost 40,000. I lost 50,000. And it's like, yeah, well, did you know what you were doing? No. So what do you think was going to be the outcome?
Right, yeah. They haven't put in the honest effort yet for a longer period of time.
Right? And that honest effort contributes to everything else, not just trading. You do business, you do anything in your personal life. Have you honestly given this 100% effort or no? And most of the time, the answer is no. So in that situation, when I knew it was no, I took a step back that summer. And it was like, okay, well, how do I learn? What are the things I need to learn? How do I improve? So, you know, when you go into the space of trading, especially in 2012, 2013, it wasn't as congested and as toxic as it is today. After COVID, trading has become very toxic. Like you have people that traded for 4 months that are these gurus that know everything and they're giving you misinformation and wrong information. At that time, it was a little bit cleaner. Right? So it was just gathering information, trying a lot of different markets, failing, losing money, you know, coming back to the drawing board, readjusting for 2.5 years, and then slowly finding some momentum in trading is how I started, you know, picking it up.
So you had beginner's luck.
Yeah.
You know, in some sense, it's good to have that early on and have that big loss. Kind of opens your eye to, first of all, what's possible, because you did make some money first. You got hooked and then you lost it. But then in some sense, it's good to teach you that lesson of risk management so early on, even though you may not have realized that yet.
I didn't have any risk management. You know, putting 20 grand into one trade with no element of where I'm going to exit if the trade is wrong. Being down, having a 50% drawdown on one single trade is like, it's not okay, you know?
Yeah, but the fact that you were able to kind of sit on that loss and reflect on it as an 18-year-old, that's very impressive. Because even nowadays, I think a lot of traders, doesn't matter what age they are, they don't really reflect on whether the mistake was on their own, whether they made a mistake, they were just kind of FOMOing into the trades, or whether it was actually the market. I think it's too easy nowadays to blame the ticker, to blame StockTwits or X or whoever's tweeting about certain stocks. It's too easy to blame that. So I think having that level of self-reflection is really important as traders to grow and to improve the future trades.
Yeah. I mean, I've always had this mindset early on where it's like, I don't get anything from blaming anyone besides myself, right? So I can sit here and I can say, well, you know, I lost X amount because of the market. Okay, what does that do for me? Nothing. I can go and I can take that full blame on myself. Okay, well, what are the things I can control? What are the things I can be accountable for? And what are the things I need to improve?
Yeah.
When I have that mindset, it allows me to look at things from a realistic point of view. People are very quick to jump into, it's not my fault. I lost money because the market did this. Market makers did this. They stopped me out. This news came out, whatever. Cool. How do you get better from that? Is there an element of you getting better? Do you have a plan moving forward when an event like this happens? How do you deal with it? People don't have that mindset. And that's like the first instinct when I speak to an individual. I can tell, well, will this person make it in this game or will this person not? Just off their level of thinking and understanding of themselves very early on.
And I think I learned from a couple of podcasts that you've done before that you are immigrant from Pakistan at an early age.
Yeah.
Did any of that experience as an immigrant here in the United States kind of help shape your work ethic or how you approach trading over the last 10, 20 years?
Yeah, so I came to America at the age of 5-ish, 6-ish, right? So it's not a lot of history that I, obviously have in Pakistan where some people came here at 12, 14, 15. So I still came at a quite early age, but I think when I did come here, I did have a chip on my shoulder from a very early age because I realized as I got older, the opportunities that are present for me in America that don't exist back home, all right? And I do think in everyone's life, there's an element of luck that is involved. There's an element of luck that you are in a first world country and you weren't born in a third world country with no opportunities. There is an element of luck there. It doesn't matter what anyone says, be it a 0.1%, be it a 1% luck, whatever probability there is, that exists. So realizing that early on was like, okay, well, these opportunities exist for me. I'm not letting opportunities that exist for me go away because of my laziness, because I am not motivated, because I am not disciplined, because I'm not things that I should be naturally, right? Or I should work my way up to be naturally. And that just kind of instilled a drive in me. Same thing with seeing my parents sacrifice everything to come to a new country for the betterment of their kids' futures, right? When they didn't have to do that. They wanted a better life for themselves. And obviously that better life would contribute to me and my siblings. So that stuck to me from an early age. And I think that instilled a very powerful work ethic and drive into me. And that's carried over to everything I do moving forward. And I don't take any single opportunity that exists for granted.
Yeah, I'm an immigrant myself to Canada, so I do understand a lot of what you're saying.
Yeah.
No, it's not so much that my parents or your parents gave you pressure. It's just the fact that you are really grateful for the opportunities you have here, so you want to work hard, whether that's in trading or other business endeavors. You want to work hard to make them proud and make yourself proud as well.
Yeah.
Yeah. So do you think they are supportive of your endeavors in trading? Has that changed?
So right now they are.
Okay.
Okay. And I've always said this to a lot of young people, that whenever you introduce something new to parents that they're not too familiar with, they will naturally not support it.
Yeah.
Not because they don't believe in you, but because they don't understand it and they want the best for you. And they know what's best for you is the things that they are aware of. So if let's say trading is something that they're not aware of, or let's say how, in today's market, you have e-commerce, you have SMMA, you have so many different ways for young adults to make money that didn't exist 10, 15 years ago, right? Or the opportunities weren't available as much as they are today. When you present this to your parents, they will think that it's not real or it's not, long-term or it's not something that's stable, which they're right to think that because they haven't seen much of it. So when you go to them and you say, hey, mom, dad, I want to be a trader, and they go, I don't think that's a smart idea, which is what happened with me, don't get mad at them. They're only looking out for the best for you, right? For your future. Yeah. My thing is prove to them, not for 1 year, not for 1 month, not for 2 years, year after year after year. Hey, look, I'm committed to something. Look, I'm improving in something. And look, whatever I'm doing is tangible, meaning I am making money from it. Right, I am successful in it. Not that, hey, look, mom and dad, I've been trading for 6 months and I've made X amount. Okay, well, you did it for 6 months. Do it for another 6 years. Is it just a quick 6-month run and you're done, or whatever the case is, or are you able to do this for a long period of time? So going to me, my parents weren't really supportive of it, but not because they didn't believe in me, but because they didn't believe that you could be successful in anything outside of the typical route of going to college, getting a degree and becoming a doctor, which is all great things, phenomenal things, by the way, right? Their idea was take that route, and then you have a stable job, you have a stable career, and you have something that is tangible and consistent. So trading to them was like, oh man, what happens if this happens? Are you able to do it year after year? Are you able to make something sustainable out of this? All valid points.
Yeah.
So when they said that to me, I wasn't mad, like, oh my God, my mom and dad don't understand what I'm saying, or they're not supportive, or they hate me. It was more so like, okay, they have a valid point. I have to just prove to them by actually being successful. Another reason why I should be more focused and disciplined towards it.
So let's dive into your trading style, current trading style, and trading strategies now. What do you look for every single day in the market? Let's say because you mentioned that you are predominantly a day trader and you do a lot of scalping for options.
Yes.
So what do you look at when you wake up in the morning, when you're preparing for the day, pre-market? What's your process like?
Sure. So just a few things. My process now is very different than my process 2 years ago. And a lot of it has to do with my day-to-day life in terms of other businesses and things I'm involved in.
Okay.
So I want to make that very clear, because I don't want a new trader to come on and try to replicate what I am doing right now. If you want to replicate what I was doing 3-4 years ago, do that. Do not try to replicate what I'm doing now. And I think that's a very important lesson for traders, because they'll see someone at a certain point and try to replicate that. So my style now is I don't trade every day. I don't even show up every day, right? There's certain weeks I completely avoid because I don't want to get caught up in high economic event weeks, right? If we have FOMC that week, we have CPI that week, I'm not really interested to trade until that noise is settled. And once that noise is settled and we get some sort of direction, I will then start looking to open up positions and look at the market. That's number one, right?
Interesting.
I've also realized out of 20 trading days a month, give or take, there's like 4 or 5 good trading days that I personally enjoy trading, right? I like to be involved on days where we have real trending days. Now, can you wake up and know what those days are going to be? Absolutely not. But you can filter out what those days may be, right? So for example, if let's say tomorrow is FOMC, we know today and tomorrow we're not going to get a trending day.
Yeah.
After FOMC, we might, but I don't want to be involved after that noise. Now, the next day, which will be Thursday, we might get a trending day depending on how the market processes it, depending on if there are other events going on or not. So I'm able to sometimes filter out just based on the events, based on earnings, based on certain situations that the market is anticipating, on where we may get high impact trading days.
Okay.
When I get that idea, those are days I do want to show up for. Those are days I do want to trade. Now, there's days I'll show up and I think there's going to be some action, and I sit there for 3 hours and nothing happens. Right.
Yeah.
So that happens too. Now, my process starts from a Sunday, right? Like my work day, my life, everything starts on a Sunday. I don't start work on a Monday. I start Sundays. I like Sundays because Sundays allows me to do everything without getting bugged, getting bothered, having so much pressure, noise, and so on, right? So Sunday, from the trading element, I like to prepare the upcoming week. What are the economic events, any sort of earnings. I go through my last week levels, last week areas of interest on the key markets, key stocks that I'm watching. Let's say Tesla, let's say Amazon, let's say NVIDIA. I'll go through SPY or ES or QQQ or NQ, right? Just breaking levels down and going through the last week level of interest. Hey, these are levels of interest where there were a lot of activity of buyers and sellers interacting with one another. This is where those levels were active. So now I'm able to carry those levels over, or those zones, into the upcoming week, right? So Sunday comes in the combination of looking at past week, looking at my performance, looking at the market performance based on what I thought the market will do or isn't going to do, and then I try to replicate what I think the next directions are going to be in the market. When I have that framework, I kind of have this idea on how to approach the day. Right now, Monday comes, I go through that game plan for the week. I have my levels for the particular stocks or particular markets, and now I have an approach to the market. Now, there's a level of biasness that needs to be there for you to be really stern on the direction of the play.
Yeah.
So I do approach certain days with a level of biasness, which has hurt me some days because like I'll be like, well, I think today is going to be a long trending day.
Okay.
And, you know, I'm looking for that long too hard and I missed a short. So that does happen. But I do think in the long term, it's benefited me because when I have that bias sometimes, and as long as I'm able to quickly adjust to market conditions or market readings really, really quickly to my bias, it works out.
Okay.
But then if I don't adjust to that is where the market just teaches me a very valuable lesson that day.
Expensive lesson sometimes.
Sometimes expensive lesson, yeah.
Okay.
So yeah, that's essentially my approach. And in a perfect world, like I said, a few years ago, 3 years ago, you know, I would show up every day. And I think every trader that's trying to get better and is taking this seriously should show up every day, should note down the pre-market plan of like, this is what I think the scenarios might be in the market. This is where I think the market may go and why. And then after the market closes, look at those scenarios. Look at how it unfolded every single day. That is the best education you can get. There's no course, no anything that will teach you instead of being in front of a computer and applying those concepts.
Yeah, I think screen time is very
valuable.
important in trading.
Effective screen time.
Yes.
Right? Because I see people, they'll sit in front of their computer for 8 hours. They're on their phone. They're texting. They're on Instagram. They're doing all these, but they're not really locked in, right? I always say if I was to go back to day one as a trader, my screen time, I would probably focus 2 hours to max 3 hours in front of the screen.
Okay.
And then I would spend the next 2 hours reflecting those first 2-3 hours. I wouldn't sit in front of my trading screen for 8 hours and trying to gauge every little move and every little thing that's happening.
Yeah.
I would look at the opening till like 11 a.m. Eastern time, and I would then go back and watch that recording and analyze the market from there. What I got right, what I got wrong, what I missed. Was it something that I could have read or was it just random?
So it sounds like you also only trade from open to midday.
Yeah.
You don't trade afternoon sessions at all.
No.
Oh, that's interesting. I'm also like that because I'm on the West Coast in Vancouver time.
Yeah.
So by around like my local time, 9 o'clock, I'm usually done trading for the day. Yeah.
Yeah, no, I learned with myself early on whenever I would sit in front of my computer for too long, I would start giving money away.
Yeah, you start clicking buttons.
I'm just not effective personally. It may work for some people. For me, most of my moves or action happens the first hour, maybe hour and a half.
Okay.
I don't get many moves based on my approach to the market midday. And I also just, in a perfect world, don't want to sit in front of my computer for 9 hours looking for market to give me opportunities that get harder and harder. Also, from a mental point of view, we don't have the mental capacity to be alert and be locked in for 9 hours straight and assessing the market. It's very, at least for me, it's very difficult.
Do you use any indicators at all to help with your trading?
So I use the main indicator I use is VWAP.
Okay.
Right. VWAP is there. But in terms of like moving averages and like RSI, MACD, I'm not a fan of it.
Okay.
Right.
Why is that?
Because I think those indicators are a reflection of the price action that's showcased on a chart. If you can show me a chart that's been going up 5 candles straight, most likely RSI is going to be high on it. Right. Most likely MACD is curving up on it.
Right.
So to me, it just having another thing added doesn't make sense to my approach. My approach with the market is just understanding that the market is a place where we have interaction between buyers and sellers, right? And I want to identify, if I can identify, which is not possible all the time, what are the areas of interest that buyers and sellers are more active in, right? What are those zones? And in those zones, who is more in control? Are the buyers more aggressive? Are they more passive? Who is more, who's willing to up the bid there? Who's willing to hold the bid? Just try to read that at those key points with obviously market context and so on. And that helps me gauge proper entries. But if I start adding more things to it, more confluences, and these are things I use at a point, by the way. It's not like I skip them. I went through the phase. I went through the phase of using them, right? For me, it just overcomplicates my trading. It doesn't make sense. Trading is simple, yet it's not simple. What I mean by that is a lot of people, when they cover trading, and to each their own, but it doesn't make sense to me because it's like when you look at the market as a whole, big money's moving the market, and big money is not looking at a bull flag pattern, in my opinion, saying, bull flag pattern, hey, Billy, go put $1 billion in Tesla. You know,
Right.
that's my point, right? The bull flag pattern, the concept is there in terms of what price action is saying. Well, there's this pattern that exists. Cool. Let's dissect the pattern, understand the pattern. Let's understand what is happening. Well, what was the initial move? Well, we got a good, strong spike up. The stock is pulling back in a healthy pullback, and it continues. Cool. We can give that whatever name we want, but let's understand the move first. Let's take the name out. For me personally, let's take the name out. Let's not call it anything. Let's just understand the context, right? And when we understand the context of it, and we can see, well, you know, on this strong move up, when this particular instrument started floating around and started coming down a little bit, there wasn't a lot of aggressive selling. There weren't a lot of sellers involved here. It was just some, you know, normal price action, some normal hangouts, some normal consolidation before a next move up. When we start giving names, in my opinion, we start making it very difficult to analyze the proper moves from the wrong patterns. And that's where I've seen a lot of traders get caught up in the bad mix, because they'll give every little move a pattern without understanding the context of that pattern, context of that move, which makes their trading more difficult.
Yeah, I think that's a really good way to see patterns, because I personally don't memorize those chart patterns.
Yeah.
You know, a lot of beginner traders, they have this screenshot or a PDF of different patterns. They memorize it. Well, great.
Yeah.
But you cannot, I personally don't think you can just memorize patterns without knowing the context, without knowing the movements you talked about.
Yes.
So I think it's great to have, but it's just another one of those things where people think trading can be easy with indicators, patterns, memorizing those things, but that's just a very, very small piece.
Yeah, no, exactly. And I see it all the time. Like I see those TikTok videos when people draw the pattern, they're like,
Yeah,
look.
oh my God.
And I'm like, that's not how trading works, I promise you. But if you guys want to try it, experience it over a course of 100 trades, unless you understand the context of the trade and, you know, what is actually happening there, this becomes very irrelevant.
So I understand you trade both the S&P 500 options as well as the individual stocks. So what would make you gravitate on a certain day towards the individual stocks, stock picking certain stocks to trade, versus just trading the entire market together?
So the times I prefer to trade a stock and not an option is if like the option premiums don't make sense. The IV is too high. Because when you go into the depth of options, right, there's times where a stock can really start moving, but option premiums won't move as much because the IV is so high, meaning that the market is factoring in a big move up or down sometimes. So it wouldn't make sense for me to take that risk with that particular option. So I'm like, okay, well, it doesn't make sense for me to touch this option. Let me just trade the stock from a risk element, right? So those are times where I would completely not touch that option at all, and I would just touch the stock.
Okay.
But like I said, it depends on what is going on for that particular instrument at the time. Like, for example, if Tesla has earnings tomorrow, and let's say Tesla's IV is super high.
Yeah.
If I trade Tesla's options, even if Tesla moves at 50 cents, the option premium isn't going to move it up as much. Sometimes as it starts moving up on any little pullback, the option premium gets crushed. So at that point, it's like, well, either I don't trade Tesla at all, or if I do trade Tesla, touch the individual stock and not the option.
Would you say you're more of a technical trader or fundamental trader? Or do you use like a blend?
I mean, from a fundamental point of view, I don't care if I'm day trading, right? So I do have swings open and I do swing trade as well. So from that point, I do care about a level of fundamental analysis. Not long term. I don't care about like a 5-year point of view. I care from a shorter point of view. But if I'm day trading, I do care, well, what is on a fundamental level, what does the market care about? Market is so heavy on inflation. If they're so heavy in inflation data right now, what are the things they're looking at? What are the things they're looking from the Feds? What are they looking from CPI, right? These are important events. What are they looking from earnings season? So those things become a key factor for me to pay attention to and know when those events are going to happen. Because if, let's say, market is focused on inflation and we have CPI coming up in 6 days, and inflation is the big topic, which is situations we went through, in those predicaments, market's going to be very flat for 6 days. Because market is like, okay, well, big money is going to stay on the side, right? They're going to stay cash. They're not really making any activity until this data comes out, and they can obviously analyze it, digest it, and make a move from that. So that's where I do look at a fundamental point of view. Same thing, like let's say we go to Tesla, right?
Yeah.
We had the thing with Elon and him getting the voting rights and et cetera and et cetera. Once that cleared up, we started seeing the momentum kick in. So from a fundamental point of view, those things on top of like stock ratings, increases, decreases, targets, who's buying, who's not buying, they play in the momentum element, right? So I can't just look at a chart from a price action point of view and say, you know, from a price action point of view, I'm going to go short, but this stock or this individual, you know, thing can have so many good news around it where I now have to start looking, well, maybe there is an upside play here, but I need price to confirm it. I need to see the buyers and sellers are active in the levels that I think they would be active in if they think this is going to go higher. So it's a combination of both, but it's still like, it's more of the price action element and a little bit of fundamental to see the momentum and to see the sentiment.
What's your approach to risk management? I understand, obviously, it's been 11 years since that big loss. I'm sure you've learned a lot of lessons and you developed your own system.
Yeah.
What's your risk management system like nowadays?
Okay, so just going on to a big loss. So I did have a big loss a few years ago in 2020.
Okay.
Right?
Yeah.
So 2020 was actually one of my biggest losses, and it was a public loss I had. And looking back, I still think it was a very good thing that happened to me. So that February of 2020, I did very, very well in the market. And I started that year where it's like, I want to make $10 million from trading this year.
Okay.
So I started that year with this mindset. I want to make $10 million from trading.
Right.
And I, you know, which is the worst thing you can do as a trader. Because
Right.
you don't know what the
Profit
market's
goals. Yeah.
The crazy part is whenever I've set profit goals in trading, I've never, ever hit them. Whenever I didn't set any profit goals and I'm like, just trade what the market gives you, be calm, collective, I've traded so well, which is like insane. I learned this in like year 6, 7. Like the first few years, I was chasing a money goal every year, right?
Yeah.
So in 2020, my profit goal was like 10 million. I was like, you know, I haven't had a year where I've made 8 figures from trading, just trading itself, day trading, never 8 figures, right? So I was like, okay, 2020 is going to be that year. So I start off January well. I start off February really well. And then COVID happens. So when COVID happens, I switched from day trading to now shorting the market. Oh. So I believe it was end of February where I had a built-in position that I slowly built in of $500,000 in SPY put options. So in context, if I put 500K in SPY put options and they expire and until my expiration date, I lose the 500K.
Yeah.
Right? So as I built this position, I went in 100K, 200K, and I'm going up on this position. Like at one point, my unrealized profit, like that total position at one point was worth like 900 grand. Right? So I was up on it at a point.
Because the market was selling off at the time.
Was selling off. So
yeah.
You know, I'm up almost 100% of my position. I should sell. I should exit. I have good momentum. I don't.
As you probably already know from all of my YouTube videos, most of my strategies involve scalping, momentum, and shorting. All of those things will require a very fast broker platform. And I have an exciting promo from one of the premium brokers I personally use, Centerpoint Securities. You can use Centerpoint to day trade with 0 commissions for 60 days. And that's not all. You'll also get access to Dash Trader Pro for free. That's the trading platform you see in all my videos. That's another $150 value for free. To get this offer with all the freebies I just mentioned, you can sign up to Centerpoint Securities down below. And now let's get back to the video.
Almost 100% of my position. I should sell. I should exit. I have good momentum. I don't. I'm like, I remember my last ad was about 130 grand more. So at that point, my total position size was like 900K total in, right? And I didn't sell. And at this time, I'm like on YouTube, I'm on Twitter, I'm on Instagram, and I'm like talking about it. I am short. The market's going to go lower. It's going to go lower. Oh, man. The next month, my option contracts went from like my position total went from 900 to like 300 in like a month and a half. Not even a month, even probably less, to just slowly decaying. And the worst part about that after was every trade that I took after that SPY short remember I took a Tesla short, lost money on it. Took a Zillow trade, lost money on it. So the Tesla trade, I probably lost 150 grand. Then a Zillow trade, I probably lost like 70 grand. And this is just like, I'm on complete tilt. Like I believe like whatever I touch now just goes against me. Like I am convinced at this point. Like anything I touch, I'm telling everyone just buy the opposite, you will make money.
Oh my God.
Right? And I think what was worse about it was that it was public. Right? So at the public
That's
point,
added pressure.
it was added pressure. And from a public point, it was a lot of oh, he doesn't know how to trade a bear market. He's been getting lucky for 6 years. He's been getting lucky for X amount of years. And at a point when you hear so many things, naturally as a human, you start to believe these things.
Yeah.
So I did at a point was like, well, have I been getting lucky?
The last 6 years.
I was like, have I been getting lucky? Well, maybe I have. Maybe I don't know how to trade a bear market, right? So you start questioning these things, which as humans, it's normal. Like we feel these things. And I share this level of like openness because I know people are at a earlier stage than I am and going through this. So I want them to know even at a stage that's a little bit further along, people still feel it. So I felt that I had to take a few months off. And like I really genuinely questioned everything trading wise for like a 2-3 month period. Like, oh my God, can I keep doing this? Am I done with trading? And I think when I took 2-3 months off, I came back in July of that year with like very minimal size to recoup my loss, recoup my trading. And I still think I was up for the year. So after the 500K loss, I think I was still up 800K in like June, July. So I was still green, thank God.
Yeah.
Because I think if I was red, I would have went on a complete tilt. Like I genuinely think I would have probably went on a complete tilt.
Yeah.
I closed that year out, I think about $2 million, right? So that to me was one of the best trading years that I could be proud of, even though the year after I made more money, just because I took this big punch to the face, not just financially, but also like from a mental point of view. And I was like, okay, well, how do I come back from this, from publicly and also myself? So working through that was very, very difficult. And that's why I say it was probably one of the best things that happened to me because I've learned so much about myself on a deeper level.
Yeah.
I learned so much about how I approach the markets and where I kind of let my ego get in the way of like, I need to make X amount of money and that just destroys me. And risk management, which is, my risk management there absolutely makes no sense. Like my typical approach is, hey, if I put 400 or 500K into a trade and I'm up 20-30%, take some off the table. It doesn't matter where you think it's going to go. Take something off. I didn't take anything off because I got greedy. I was chasing this $10 million goal. And I think that year built a really good foundation for 2021, where in 2021, I was able to walk away with $7.5 million in trading profits. And that's where I was like, wow, I really feel like I got this thing nailed down. And I think that loss helped a lot from that. So I had my biggest year trading wise from a full calendar year from that biggest one loss.
Yeah, that's impressive.
Yeah.
That the comeback from that loss.
Yeah, but in that comeback, and once again, I share this because I understand the people that are stuck in that stage. I did at days feel very defeated and very unconfident in myself. And then obviously you pick yourself back up. It's normal.
Yeah.
You feel it and you're like, all right, well, I got it. Let's go. Get back up, But I did hit those stages countless times of like, okay, because you go on Twitter, you go on Instagram, oh, this guy sucks. And you're like, oh my God, right? Oh, you go on YouTube, you hear it. Instagram comments, and I'm just like, I deserve it. I put something out publicly. People lost money too, which was, I'll take the blame for it, but it does get to you at a certain point.
How would you have managed that loss? Like when that specific position went down, when the market was going straight up, when would you have cut that loss to a certain, do you use certain percentage or dollar loss, unrealized loss, and cut it?
So it depends on the position and depends on how I'm trading for that quarter, right? So a lot of my position sizing isn't consistent, where it's like, if I'm actively trading and I'm up, let's say $1 million for the quarter, right? For argument's sake, my risk gets a little bit more, also alongside with market conditions, also alongside with how active I am. If let's say I'm not active for 3 weeks, I'm not going to come to the markets tomorrow and throw on $50,000 of risk. It's just not something I'm going to do. It doesn't make sense. It's a similar concept. If you're away from the gym for 2-3 months, you come in and you start benching your max rep again. You're going to destroy your body, right? So I slowly work my way into it. I slowly work into consistency. There's also a thing with the markets when you trade and you're involved in it, you start getting this flow of the market. Start getting this understanding of like, okay, well, you get this intuitive feeling of like what's happening. You without you looking at news, without you looking at what the market's looking at or wanting to look at, you kind of are in tune with everything, right? So I start building risk from there. Now, if I have a bad month or I can't seem to find any momentum, I'll keep like a 5 or 10K max risk. I won't go more than that on a trade or even on some days. I'm like, well, you know what? If I hit this max risk, I'm done. I need to find momentum. Now, when I find momentum, now that risk becomes contingent on my last few weeks' performance. There's times I risked 50 to 100 grand on a trade, on a single trade, where if I'm wrong, I am comfortable on losing 50 to 80 grand. Obviously, that trade has a 2R multiplier there, where if I'm risking 50 grand, if I'm right, I'll make 100 plus on the trade. Well, I'm not risking 50 to make 50. Like that's not rocket science. Like that doesn't make sense, right? And then there's trades where I've risked 5,000 to make 10. Yeah. So the R multiple element is still there, but my comfortability on taking that big scratch loss isn't really there. So it goes back to how you see some people say every position has to be similar. I think when you're early on trading, sure. But I think when you pass that early stage of trading, there are certain positions that are so beautiful where you have to throw more risk. That's where you make your money. Like you won't make big money, in my opinion, by keeping your risk consistent on every single trade. It's a good place to start to learn and identify your flaws and keep a system relevant. But I think when you see certain trade setups that happen that you see that are like your bread and butter and come to you naturally, which don't happen every day, right? So put on more size there. You know, put on a little bit more risk. If it doesn't work, decrease risk on the next few trades, get comfortable again. And when that trade opportunity presents itself, do the same thing. That's like my approach to risk now. But early on, which is why I was saying before, the things I say now, don't replicate it if you're an early trader. Because when on my early on days, my risk was consistent. If I'm risking $100 or $200 a trade, that's what I'm keeping consistent on a trade to have a consistent system. Yeah. Because I cannot identify the great opportunities at that early stage of my career. Right? I cannot differentiate between a great setup that I'm so comfortable with to a cool setup that I'm maybe not that comfortable with. Everything seems great to you at that point. Yeah. But when you pass that stage and you get really understanding of the market, understanding of yourself, understanding of your setups and what really starts moving, see something good, put the risk on. Like there's trades I love sell-offs, right? I love when the market sells off, or I love when an individual instrument sells off. I love to take short plays or put plays, right? And when those plays present themselves and I see something happen continuously, I'm going in with size. And when I go in with size, I create this framework in my mind where when I take that trade, I've already accepted I'm wrong. I've already accepted I've lost money. So when it starts moving against me and it's going to my, let's say, stop loss, and it's like negative 12,000, negative 15,000, I've already accepted I lost 40 grand or 20 grand on the trade. So if it hits that point where if it gets to that particular level of, let's say, my stop loss, my invalidated zone, I already know I lost the money. So if it hits there, I'm not panicking. Yeah. The approach people take when they get into positions is, okay, I'm risking 10,000. I'm going to make 30 grand. They engrave in their head that they've made 30 grand. They're up 30 grand. What they're going to do with that 30 grand. So the moment the trade goes against them, they're panicking. Now they're down 10 grand. They don't want to sell. Now they're down 20 grand. They're like, oh man, I should have sold at 10. Now, next thing you know, they have a 15, 20, 30% drawdown on one trade because their initial framework of the trade was messed up.
Yeah, that risk, that $10,000 risk, if it was planned properly, it shouldn't make them trade emotionally after that. Yeah. They should have stopped out.
And I say, if you take a trade and you feel all over the place, like, oh my God, I'm up, I'm down, and you get these feelings in your stomach, you're trading too big.
Yeah, it's true. So you mentioned that there are certain plays, certain setups that you see that's like A++ that you were sizing.
Yes.
What does that playbook, I know you sometimes talk about you have different playbooks. Yes. What does that playbook look like? That ideal setup where you think for yourself as a trader, this is a time to size in.
Sure. So the market, in my opinion, has a few different timings, right? 9:30 a.m. Eastern Time market opens. 10 a.m. is, let's say, cycle number 1. 10:30 a.m. is cycle number 2. You can call these two levels initial balance, right? Depending on who looks at what. 10:30 a.m. is technically the first initial balance. Most people look at 10 a.m. as the first initial balance, right? 10 a.m. a lot of times we also get the most economic data. 10 a.m. is also a lot of times when a lot of institutions want to get involved. and then you have 11 a.m. So it's like when I trade, I also have, you know how people have support and resistance lines on levels? I have like straight lines on times.
Okay.
Right? So I have a play, I mean, name-wise doesn't matter, but for myself, I call it a morning top setup, right? So the idea here is you'll see a stock open up or an instrument open up, let's say, even if it's ES or S&P 500, it'll open up, it'll start trying to make a move up on the first 30 minutes.
Okay.
And as it starts trying to make a move up, you'll see that the first initial move had somewhat strength, but that strength didn't carry over to the range that it hangs out in.
Okay.
So when it doesn't hang out in that same range after making the first initial move up, it identifies that this is not really a strong move, right? And then if it's going into that range that I have identified as I said early on, as a key level where buyers and sellers interact or exchange a lot in value, I would then look for a short. I'm now actively looking for a short. Now, if we get to 10 a.m. and we pass the 10 a.m. window and let's say it's 10:10, 10:15, and I start seeing that weakness come up, I will then go for a short. And what am I looking for weakness? I'm looking at the activity of buyers and sellers. And there's a lot of different ways you can look at this. You can look at it through order flow, right? You can go on Bookmap. You can go on footprint charts, right? You can look at TPO charts from the past prior sessions to look at where buyers are active or not. Not that you have to add all these things to overcomplicate it, but in simple terms, some people can just look at level 2.
Yeah.
Right. Or go into level 3, right? Just to see the interaction of how buyers and sellers interact at this particular level. Now, if you see the interaction there is where buyers are not aggressive, and if buyers aren't aggressive, price won't go up higher. But now maybe are buyers passive, right? Are sellers selling, and is there like a big buyer absorbing all of these orders? If there is, what happens when that selling dries up? Price will go up, right? Sometimes there's no buyer absorbing anything. Sellers are looking to get aggressive. There's no passive buyer active in those zones. So when you're able to identify that in that particular setup, I then go and I'm like, okay, well, where would this trade get invalidated? Okay, well, it would get invalidated a point above this level, right? If we went into this level, most likely it's invalidated. If it's invalidated, how much will I lose? Okay, well, depending on my size. If this is my size, I will lose 10 grand. If this is my size, I will lose 30 grand. If this is my size, I'll lose 50 grand. Well, how comfortable am I with this particular setup in this market context, right? Every setup may look similar, but different market contexts exist in every setup. That same setup can exist the day before FTMO, right? And it can exist a week after FTMO. Even though the setups look the same, they have different context behind them, different players behind them, different things happening in the market behind them. So you need to factor those in. Now, if it's a week after FTMO, I would maybe be more comfortable putting size in. But now if it's the day before FTMO, I'm not putting heavy size into that, assuming we're going to get a crazy sell-off. I might take the trade, but not with the same aggressive size that I would take on certain days.
Yeah, that's what you talked about earlier. You really look at economic calendar, like what's happening for the week to decide whether you want to size in or you just want to wait till that's over.
Yeah, and
right?
to the economic calendar point, it's like understanding what does the market at this, what's the theme of the market? What's the market care about?
Yeah.
Right? And then understanding what the market cares about is really important because once those events come out, those economic data, or you see Powell speak, or you see someone, just the FOMC meeting comes out, or whatever the case is, and you can start seeing what is the market doing after. Is it reacting positively? Is it, reacting? Because we can see news and we can say, oh my God, this is terrible news. Market goes up. Okay, well, does it matter what we think? Well, the market's going up higher. So the market thinks it's good news. Buyers are still buying up, right? So putting those two contexts together and then relying heavily on what the market does with that set of news.
So, what is your favorite takeaway from Umar's podcast interview so far? Comment down below and let me know your thoughts on Umar's trading approach and any questions you may have. Coming up next on the Humble Traders podcast, I asked Umar for his detailed step-by-step guide for beginners who are looking to start trading. So make sure to turn on that notification bell and stay tuned for the second part of this interview. And if you're interested in joining a prop firm to learn trading and receive funding, the second part of this interview will cover how Umar runs his own prop firm and how he selects elite traders. To keep things real as always, he also openly talks about the challenges that he's facing as a founder of TradeZella, a trading journaling software. If you enjoyed this video interview, please consider giving us a like and share your feedback with us down below. You can also subscribe and turn on the notification bell to stay tuned for the second part of the podcast.